it was a nice rally for the last couple of weeks.
Yeah.
So what does this mean? Does it mean that it's over? How should we be looking at this? What's going to happen? Like, what's the deal?
Um, solid week last week. Now we're gonna have a little pullback for a few days. One quick tip to know how the market is going to perform going into the week. If you look at the Sunday session at 5 p.m. Central or tune in to CNBC's app, the futures market will tell you what happened. So at the open yesterday, the market fell and it gapped down a little bit. Also, expiration ended Friday. So that's another reason the volume started to pick back up. And now because investors are a little bit worried about the economy and overall, we are seeing a little bit of a slight drop. Don't be afraid. It's still August. August historically is a slower month. I always tell the story of August 24th, 2015, like was one of my biggest days in the market. So just be careful. September and October will start to pick back up. But this week we should have a little bit of a pullback.
Yeah, I mean, I'm just gonna say that as far as value, people forget that Fridays are usually expiration days. So I know people look at
Yeah.
Friday like, wait, we're the first time in 5 weeks we had a losing week. So that's interesting. But you just got, like I said, just be patient with it. Again, the summertime is usually when value decreases. That's just historically. And we're midway through third quarter, and
Yeah.
so again, be patient because we know what the fourth quarter does, especially in the companies that we talk about. A lot of the tech companies usually have their strongest quarters in the first or the fourth, or depending on their cycle, the first, like a company like Apple. So, you know, this is not something that we should be surprised by. We've seen it happen. I remember in August 2020 when we saw a nice little run, and then we had a great pullback at the top of September. So history, we should use that as a catalyst to say, all right, well, this is what we got information from. If we want to go back further, again, look at how historically things trade over the summer months. That's a slowdown, but when we see a pullback like this, again, it's another opportunity. If you're starting, like, all right, well, this is some, I can now get to the points that I like. I can get back to the support levels or resistance levels and use that to my advantage. So you should take it as a learning opportunity or an investment opportunity.
Once again, and remember at the end of 2020, after COVID hit and then the market rallied, everyone was like, man, I wish I had an opportunity to get it at a low price. Now we're having consecutive weeks or months of being able to get in at these prices. Please enjoy them, because once the economic tide turns, this election cycle ends, and I talked about it in the presentation, but 6 months after the election, volatility usually ends and we start to see a upswing. So for those of you that are looking to hold for 2 or 3 years, you will be okay.
Okay.
Okay. So let's talk about this. AMC shares tank as rival warns of bankruptcy. Is it now a good time to invest in AMC?
It's tough. Because okay, let's be very honest. I know when it comes to meme stocks, I'm normally like, don't touch them. It's really hard to bet against AMC, maybe at $14 or so. If you're looking to invest for the long term, you can hold it. But I don't see people going into theaters. And I know they're doing something very interesting in terms of the ape rollout to be able to no comment on the ape thing this time. Not the documentary. No comment from me. Very interesting business model to get more liquidity into the business. I just don't see people going into AMC. I would recommend it as a swing trade. So if you're looking to get in between 12 and $14 and you want to ride it up, great. I wouldn't hold it maybe for a 5-year period unless like the economic landscape for AMC pans out to be better. But I'm gonna be honest, it's hard to get people to watch a lot of normal content, let alone going to a movie theater right now. I will put a hold on this for a long term, but I will say it would be a decent swing trade.
Yeah. The numbers show it too, right? So the three major theater firms in the country are AMC, Regal, and Cinemark. And so if you look at the numbers for this year compared to 2019 pre-pandemic, I think the number's like 5 billion, right? As opposed to in 2019, like I said, pre-pandemic, the number for almost at the end of the summer was like 12 billion.
That's
So
crazy.
you're talking about less than half of the amount of income coming into theaters, taken to the fact that the ticket prices are now more. but people are just not going at the same way. And the movies that they thought would be blockbusters haven't really been blockbusters.
Yeah.
Right? And we had this conversation about what is a blockbuster. Well, I always look at it like, has it hit $1 billion in revenue? And so like Top Gun has been the only blockbuster, quote unquote, if that's the criteria. Other movies like, Marvel, they thought Thor would be a blockbuster, but that didn't really stay. Then they thought, maybe something like Toy Story could, not Toy Story, but Buzz Lightyear could be a blockbuster movie. And it just hasn't hit. And a lot has to do with streaming, right?
Yeah.
Like we can't discount the impact that streaming has on people going to the theaters. When I know in a contract, 30 days after it's in the theater, I can now watch it in my home.
Yeah.
Right? If I have to just wait, I can just, pay one price and watch it with my entire family as paying, $100 for a family of four to go see it in the comfort of my own home. So it's going to be tough. I'm not big on AMC for those a number of reasons alone, but going down the line of where's the growth going to happen?
Mm-hmm.
It's going to be tough. They got to be pretty innovative.
I remember in 2019, I think Regal had a card, I think for $50 a month, you can watch unlimited movies.
Right.
AMC may need to do something similar. Now, with the fan base they do have with that 8 fan base, they may be able to monetize, but they need to roll that out really fast. And like you said, I mean, I watched Top Gun last Wednesday at home. Amazing movie. I don't think it was going to be that good. I feel bad for not going to see it in the theaters, but like you said, if I can wait 30 days or 45 days and watch it at home, what incentives do I have? So I think for companies that have physical brick and mortar stores, you're really going to have to figure out more incentives to get people to leave their home and come into your store.
Yeah, it was Regal, right? They had I believe it was the 3-month subscription.
I should have got it.
And it was unlimited films, but it only could go like at certain times. Like
you have to go like when I think from 10 to 2 or something like that.
Yeah, so, never on the premiere day or something like that.
Yeah. I mean, we're in Hollywood right now, so the landscape has definitely changed. When you look at film, it went from movie theater. Well, it went from like blockbuster, movie theater era, DVD era, streaming era. But what's next? That's the question.
That's what I want to ask you. You transitioning Hollywood shoddy, right? What's next?
That's a question that people have to start asking, because nothing lasts forever. And okay, we're in streaming, but we've been in streaming for a while now. Mm-hmm. So at some point, there's gonna be something after streaming. So I think that the companies that can, already start to plan for that will be, ahead of the curve. And that's a conversation worth having. Like, what is the next form of entertainment after streaming?
I think we tapped into it, but I don't want to say it too early. Do you think the content houses like Netflix, and I know some people hated my Netflix take, but currently have $27.7 billion worth of liabilities? How much longer do you think Netflix and companies such as Netflix can continue to pay $100 million for a series for people to binge watch it in a weekend and never return to it before that model turns over?
It's not too long. It's going to be difficult. Yeah. It's going to be difficult. And that's why those companies like Disney have such a strong advantage, because, when you talk about vertical integration, they're not just relying on content. So when you look at Disney, you have the theme parks, you have the cartoons, you have Marvel, so now it's like
ESPN.
You can utilize exactly sports. So now instead of just one missile, you got 10 missiles. Mm-hmm. So Netflix is a great company, one of the best companies ever created, but it's still kind of difficult to compete with somebody that has so much in its arsenal. Yeah. And so I say that to say Apple. I know we always harp on Apple, but I think the next content giant
mega power.
I think Apple will be a mega power in content space, just because they have so much cash at the disposal and so much resources at the disposal. Everybody, well, not everybody, but the vast majority of people, especially in America, have iPhones. Yeah. So they have a tremendous advantage already built in with the iPhone. I think they're still figuring out how to actually make that work as far as their content space is concerned, but they're working on it. And that's something that they already have a tremendous advantage in that space. So I think Apple is something that, is interesting to watch when it comes to the content wars, because a lot of people are not really talking about Apple. Yeah. But, the streaming companies, at some point, they're gonna have to transition their business model. And I think that one of the reasons why Apple may not be pushing so hard into streaming is that they're already thinking about the next leg of content. And maybe they're already saying, okay, we really can't win the streaming war, but we can potentially win the next war coming.
And if those Apple glasses come out, go ahead, Trey.
No, I was gonna say they're going for it. They just won the Academy Award for Best Picture.
Yeah,
They've won Emmys for the Good Morning America show. So they're in the space, but like you said, they have the ability to literally dominate the space. It's just about how they want to go about it. That is Apple is always, you got to keep your.
I mean, and with Tim Cook being there as a great operator, like he's always looking at, I mean, and I hate to say it, every company that we invest in, we have to look to see what the net profit is. Like we haven't even mentioned, and I said it last week, if Google, who has a better profit margin, like they get all their content on YouTube for free. What a genius business model. What if they revive Breaking Bad and throw Breaking Bad 50 million and say, hey, put it on YouTube? Would that not be a top show? So when I'm saying Netflix is paying too much, and we've seen it with SoFi, we're seeing it now with Evergrande, there isn't an amount of money that you can have. We're seeing it with China. We'll talk about that later in the presentation. There isn't an amount of money that you can have that you cannot overspend and go into debt. So you have to keep your eyes on how much you are spending. Avoid lifestyle creep in your personal finances, but also in your business. Like Netflix is a company, but when you're spending that much money on content and people are complaining about spending $13 to watch $15 billion worth of movies, you have a horrible business proposition that isn't going to last long. But shout out to Apple.
And they missed the opportunity for live sports. Like that's a big one. They missed the opportunity, and it may not seem like much, but Amazon getting baseball contracts. They got Thursday Night Football. They missed, like Disney already has Hulu under the umbrella. They have ESPN under the umbrella. So, I mean, the number one thing watched in the country is always the Super Bowl.
Yeah.
Right. Well, it's usually sporting events, right? Most people gather around to watch those things. So the opportunity to have that, I mean, they missed the mark on it.
Or even college sports. Like, how have you not went there? There are certain markets that are going to be everlasting, that are always going to have support. So I think, it was a huge mistake to be able to miss out on that. It would have been great if they would have been able to get rights to the Super Bowl. But yeah, they have to restructure. And I know they're trying to make a move into gaming. It's a little bit too late. You have some fierce competitors in Apple gaming, Microsoft, Sony, PlayStation. It's kind of tough.
And I also think that it's one of these things where Netflix, you have to pay. It's a subscription-based model, right? But in history, the free content has always been the most valuable. If you really think about it, like even if you look at TV, like NBC, ABC, Fox, that's where the giants play. Like, of course, HBO, Cinemax, things of that nature. But I look at it like, and the best companies do a combination of both. So if you look at, Disney, they have, ESPN Plus, and they have these different streaming services, and even ESPN might not be part of your basic package, but when you have ABC, different things of that nature. So it's like, earn your leisure. We have content that is free. Most of our content is free. If you want your handheld and you want more, exclusive
direct guidance,
one-on-one guidance, then EYL University is a subscription. Red Panda, same thing, right? Where you have Market Mondays, which is free. So now the best business model is a combination of both. That's the best.
Might clip that up. That is the business. I mean, Terrence came and said it when we were in Miami. It's like, even with AMC, if Breaking Bad and Walking Dead were behind a paywall, they would have died in season 2. You have to have a free way to drive them in and then back it up with a subscription on the back end.
So, and like I said, when you look at a company like Disney, they've done it, and I don't think people even pay attention to that. Like, they have free, most of their content is free, but then they have pay as well. So I think, Apple is going to follow that business model. And that's the part that Netflix is going to struggle, because once you come out and now it's kind of hard to have Netflix is free. Now because your business model is based only on subscription-based model.
Yeah.
So how do you compete? Like you said, how do you compete with YouTube? How do you compete with things that's actually free? Some people might be willing to pay for it, but some people might not be willing to pay for it.
And then you add the fact that they're trying to put ads inside of their programming, which is like, we're not used to that. We're not accustomed to that. Like, we're accustomed to seeing ads on Hulu, right? Like, we're accustomed, even if we watch the Disney Channel, like with our kids, like, we're used to seeing commercials inside of these programs. I'm not used to seeing commercials on Netflix. So like you might lose an audience for even trying to change, the business plan in that sense, because it's kind of late in the game, right? But you need to figure out how to add revenue. Obviously, getting ad dollars in makes sense, but your audience they haven't been taught to look and view your content like that.
Yeah. And they can't do the Coming to America too and just have product placements everywhere. Oh, that was on big ass. Shout out to Eddie for getting every bag on earth. My goodness. But like, you have to learn to adjust. And here's the scary part about Disney. Disney, in my opinion, does not have 15 great shows on Disney Plus yet. Wait till they get some amazing shows that we love to watch. Scary hours. It is going to be tough. It's another reason why I always tell people, no matter what the business is, you should not compete on price alone. Because somebody will always be able to beat you or have more resources and more capital. It's going to be tough.
Yeah, definitely going to be tough. And we can't forget HBO. Like, HBO and Discovery, that move, because when you talk about dedicated audience, dedicated following, they have shows that happen, right? Like, last night, House of Dragons premiered. Like, if you look at the pay scale of how much money that the Game of Thrones has brought to the network, we're talking over like $3 billion. Like, that's a core audience. That show is now, you can binge watch that. You know what I mean? Like, they have shows like that. I was on the plane yesterday watching Insecure, like, damn, I really missed the show. You know what I'm saying? But you just got a core audience of following, and they have those shows they historically have had, whether it was The Wire or Sopranos or Sex and the City. They just continuously put out good content. And so now it makes sense that they can house it because people are going to follow it and watch it.
Yeah. And of course, companies smartened up. And the crazy part is Netflix was an innovator, but a lot of times the part that people miss about innovation, sometimes the innovator ends up with arrows in his back. So once companies smartened up and said, well, why would I license you my content for you to make billions when I can put it on my own platform and make billions and slowly eat away market share? You have to figure out a way to create something and do something that no one else in the world can do. For HBO, it is to make timeless, amazing shows every single decade. I have no clue how to do it. Disney, that market that they have with children, to grab them from 3 years old to mature them all the way through 35 years old with ESPN, amazing. I think at some point Microsoft will probably put in a bid to buy Netflix if they go underneath $100.
Interesting.
My graduates from my school being Forbes, bag drop.
Bag drop.
A mic drop, bag drop.
Bag drop.